So welcome everyone. Nice meeting you after a long time. So today I thought that I will take you through what goes into due diligence, specifically in finance and accounts domain. Actually, so I have given my point of view from a consultative perspective. Actually, so the generally when we go for operational consulting or process consulting, the whole idea is all about how do we reduce the number of transactions within the finance and accounts domain. Actually, that's the main uh, goal. So basically, the at a strategic level, it's all about how to reduce the cost to serve, right? So by reducing the transactions, the cost to serve will come down significantly. So having said that, I mean, there are different times. I have got good experience in doing finance and accounts consulting, operational consulting. So through my experience, what I have seen is that in many times the whole idea of doing this exercise is to reduce the transactions, as I have mentioned before, as well as to reduce the cost to serve. However, the kind of methods that are used is purely internally seeking, like within the sphere of finance and accounts, like within accounts payable, accounts receivable, and general ledger and treasury operations. What are all the typical transactions that occurs, and how to reduce it, and how to optimize the ERP packages, basically how to do a kind of rotation of the skill sets and how to optimize the pyramid so that the cost to serve will come down. Actually, so this is the beaten path which is usually taken, but however there is also a good path. Rather saying a good path, a better path, an effective path, we call it as an externally seeking, because basically the finance and accounts is basically at the end of the value chain. So whatever that happens in the upstream areas, so definitely that's going to have an impact on the end of the value chain cost to serve. Actually, so that's my personal opinion. Actually, so before I really get into the aspects of what goes into this externally seeking exercise, first of all, let me start with the basics. Like typically, what are the things we look into when we are trying to do a kind of process consulting within finance and accounts? Actually, so 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 basically, when we do a kind of finance and accounts due diligence, the first aspect is basically to understand what the customer needs. So usually this is done through a well-defined statement of work, but however the statement of work will not have all the details. There might be certain needs which may not come out obviously in the statement of work. I really need to, as a consultant, I need to get into the customer's shoes and I understand exactly what they need, what they are trying to achieve. So all that. So for that, we need to have certain techniques to be used actually. So usually the interview method and the observation method. Interview is basically when we are meeting with the key stakeholders within the finance and accounts domain, or for the particular domain, actually the senior stakeholders, because that gives you a lot of insights at a very strategic level, at a top level. But when it comes to looking into the actual transactional level, how things works and how the nuts and bolts comes together within a finance and accounts shared service center or a particular domain, we have to go for something called as observations. So understanding the customer need is one aspect to it. Second thing is, if at all you wanted to operate your consulting aspects at the level of wow factors and delighters, then it's always important to understand the customer business, because the way how finance and accounts is facilitated it depends on the type of businesses that are there. Depending on the type of businesses, the type of transactions may occur, the type of practices may happen. So there's going to be a stark differences between business to business. So it's always important that we understand the customer business so that we go to that extra mile of warming our customers during our consulting assignments actually. So the first thing first, is better to understand the customer business by going through the public websites and by having discussion with peers and customer front office actually. So because the customer front office understands their customer much better, their end customer much better actually. So if at all you want to understand the customer business, it's always important that you go to the front office of the customer and understand how things are conducted. Rather understanding how things are conducted, what exactly, for what purpose the customer is coming to that organization. So that will make it very clear. That will give an understanding about what the customer business is all about, as well as you can always have a kind of discussion with the experienced peers, your counterparts and colleagues who might be experienced in that particular business, conducting consulting exercises specific to finance and accounts within that particular domain actually. So you can always discuss with your peers. So third thing is basically understanding the key matrices. That's very important because before we really do a kind of deep dive, it's important that we understand the symptoms. The symptoms comes through usually in the form of matrices. Usually the key matrices and other non-key matrices will throw exactly where to focus our efforts during the consulting assignment to understand how things are conducted and what can be done to improve. And the one last thing is basically about the discussion with customers leadership, because the customers leadership may have a kind of futuristic thought process about how the business needs to be conducted and how exactly it is conducted outside the organization in their competitors and how it is done. So all those information the customers leadership will have an idea about it. So it's always good that you also have a good discussion with the customers leadership to understand the customer business. So as I told you before, the first one, understand the customer need, will exactly satisfy the needs, the basic needs of why we are in this consulting assignment. The second one, understanding customer business, basically helps you understand who the competitors are, what is the difference between the competitors and the actual organization, how the business is conducted in the way, and why the customers are coming to the particular organization to use their products and services. So this will help you to understand the unknown needs of the customer and implied needs of the customer, right? So that's very important, so that you are able to work on the zone of wowing the customer and delighting the customer actually. And the last one is pretty transactional in nature. Once you have a clear-cut idea where to focus, what to focus, how much to focus, then you start getting into the key transactional matrices. You start observing people, processes, technology, and platform, and then you come out with your own interventions and point of view and solutioning, target operating model, all those things actually. So these are the key 3 steps within consulting due diligence actually. So this particular thing can be used in all the consulting aspects, and specifically in finance and accounts also we can use it actually. So as I move further, before we actually do the literal due diligence, it's important that you start collecting information about the customer, about the business, about the finance and accounts department as such. So the overall questions that you can always ask is about cost to serve, because certain questions can be raised to the leadership team when you are having a discussion. What type of questions I need to raise? Cost to serve, that's most important, because that exactly tells you, that helps you to benchmark what is the cost to serve for an AP, accounts payable transactions, invoice processing example, or cost to serve could be at a shared service level or at a functional level. So you understand the cost to serve, it's very important. And next one is, there might be certain functions, say AP or AR, or the general ledger, where we may have possibly the highest number of transactions or highest number of complexities that might lead to 80% or 70% or 60% of the cost to serve going in those areas actually. So identify which are those 20% of the functions that are responsible for 80% of your cost to serve or or your spending in your CFO organization. So identify that so that you can pretty well make a thought process. You can always get into there, and you'll have a clear-cut idea of what to look at and how much to look at actually. As well as you also identify what are the typical SOX lapses. So SOX is Sarbanes-Oxley, so it's an auditory needs. So what are all the SOX lapses that are typical to that particular business and that are typical to that particular department? Try to understand that. Try to understand the technology layers. What type of ERPs are there? How the systems are interacting with each other? Because generally a finance organization will be really complex in nature because of acquisitions, mergers, all that. So there might be different ERP systems as a result of all these acquisitions and mergers. So it's always important that you understand technology layers, and it's important that you understand the pyramid ratio as well as the FTE split between the shared service center versus the mainstream finance. Usually the shared service center is looked upon as a transaction processing center actually. So all type of transactions which the mainstream finance feels that they won't be able to, or they feel not so significant, or they feel that so transactional will come into the shared service center, and the mainstream finance will mostly focus on the strategic and the non-transactional aspects actually. So find out what is the FTE split and how it is placed actually. And then also identify how much of work is overall is done by the finance and accounts, because it could be a skill set issues also, because there might be 100,000 transactions being generated in the entire finance and accounts domain as such, but maybe the shared service center is only dealing with 30,000 transactions. Remaining 70,000 transactions are basically taken care by the mainstream finance, which is not a good sign basically. So that shows that the skill set needs and the kind of needs specific to technology access, all that is not there or is not enabled yet. That's an indication. That's a quick win also for us to do some kind of improvements. And then also identify what are the key tasks that are not taken over by the SSE, because the SSE efficiency is always measured by how much of transactions that are covered by the SSE overall, and out of that, what percentage of the work is key tasks actually. So that will give you an idea. Typically, SSEs will do XYZ type of key tasks. When I say SSE is shared service center, will do XYZ types of key tasks. Whether this SSE is also doing such kind of things, or is it lagging behind in any way? So for such kind of comparative studies, we can very well use this particular data actually. And it's also important that you understand how the procurement function works, because the problem, as I told you in the initial stages of this conversation, is usually the finance and accounts as a department will get transactions as a result of how things are done in your inventory department, how things are done in your procurement department, how things are done in your front office customer service functions. All these things are there actually. So basically your finance and accounts function becomes a kind of center central organization which takes all types of transactions related to payments and receivables, and then getting right the book of accounts actually. So it's really a vulnerable organization. So we need to make sure that most of the transactions that are coming in because of the issues that are arising out in the external functions. So it's important that you understand how the external functions work. So So typically, as I told you before, what are the things that I need to understand with respect to the external function? I need to understand exactly um, how the procurement function works, how the customer ordering function works, how the fulfillment function works, how the customer contact center works, and so these are all some of the key things that we need to understand, as well as how much of claims happens, because usually claims are because of many reasons. One could be the customer has not got what they wanted. That could be the one reason. Second reason is customer is not happy with the quality of the product or the service. That's the claim. A third thing is some kind of serious SOX lapses. Could be that the sales function would like to get more bonuses. They may be going for more sales, and at times then it gets compensated with the claims actually. So that's a kind of number game that usually played actually. So find out whether, I mean, what type of claims are happening and why it is happening. So that might be really helpful actually. And what type of, how much of returns are happening actually? Why? Because when there is a return, then usually it's a double load for accounts receivable and accounts payable, right? So that definitely find it out what is happening and why those returns are happening actually. These are all the double load transactions that you should be aware of actually. And what type of finance and accounts queries are handled by the customer function? That's important, because if something is not happening right in the finance and accounts department, and then that gets escalated as a kind of query. It could be a vendor query or a customer query, right? So find out which are those queries that can be avoided, eliminated, that can be automated, that can be brought in through self-serve kind of thing actually. And it's also important for us to understand how the corporate finance function works. So this is where the pretty much the reporting side of it really happens actually, because if I see most of the time that the transactional servicing side of the business, they may be doing one part to it. They might be working on the core areas of paying their vendors, receiving the money from their customers, setting right the book of accounts, all that. In addition, they will also working on reports, which is meant for the corporate finance function. So find out whether those reports really make sense and whether it is really helpful to the organization, or is it for a specific one man actually. Because even if it is going to be 10% or 20% of the time, the shared service center is working on producing report in the way that is needed by the corporate function. And if we really reduce things there, the amount of reporting, it is going to have a impact on the cost of serve actually. So not all the reports are needed, right? So not all the reports can be avoided. So where is that um, where is that balance? So this question, how the corporate finance function works, will help you understand that actually. Reporting is one aspect. Second thing is basically how the decisions with respect to parking the funds, investments of the funds received, and basically credit decisions, all those things, how it is taken actually, how the corporate finance function, how the policies are being put together. So those things needs to be understood actually, as well as try understanding the difference between how much of accounts payable and how much of receivables are there actually, and how many days it really typically takes to pay as well as to receive the money. Always a good thing that it should be maintained in a way that the receivables needs to be the number of days it takes to receive should be lower than the payables. So then only the cash flow will be there, and cash will be preserved for the right operating expenses actually. So that's very important. Otherwise, the organization will have sales, but cash out situations will be there actually. right? So that's why it's important. So key things, it's important that you take away from this is it's important that you understand where the expenses are happening, which are the functions that are typically taking more expenses, and basically how the systems are speaking to each other, and basically externally how things works actually, right? So because the number of transactions that comes into your finance function is different on the external aspects also. So I can give you some examples of what are the typical SOX lapses that can happen. So one typical SOX lapse is having too many non-PO invoices, right? So that's an indication of the organization has not standardized their purchasing function, or they have not centralized it. That could be part one to the story. Just by saying no PO, no pay, it's not going to work. It's just a slogan, I would say. So understand exactly how things can be done here. Like few organizations, instead of saying no PO and no pay, we really need to come out with a kind of analysis and findings. What percentage of products will come under purchase order, and how much of decentralization happens? This generally happens. This a lot of non-PO purchases. They generally happens in the oil and gas industry actually. So when there is a kind of sudden oil find, or when there is a sudden need to improve the production of the oil, the purchase the centralized procurement function will be bypassed because of its a number of procedures involved. Sometimes the particular vendor who is trying to provide the product may be someone who is closer to that departmental head. That's also quite possible actually. So these are all the things that you need to look at. This is one example for a SOX lapses. The second thing is basically uh, how much of what goes into your vendor due diligence, like doing the onboarding, what goes into it actually, how much of red flags are raised during the vendor onboarding, and out of that how many are resolved actually, how many of them are overridden. That's the second aspect to be looked into. That's also a typical SOX lapse. Third thing is credit terms versus actual paid terms actually to the vendor. So find out whether any particular suppliers or any vendors are being paid not in alignment to the credit terms, because this is going to impact the financials of the organization. That's the reason I'm bringing it under SOX lapse actually. The fourth thing is basically there could be certain things like are there any uncategorized suspense accounts lying unaddressed for a high period of time? So then that's a clear red flag to understand why this particular item has not been reconciled, posted yet, or identified yet in the book of accounts for over a period of time. So that's a clear-cut red flag that needs to be looked into. So that's also one typical area that we need to look at actually. So likewise, there are some other types of SOX lapses also happen. So as I told you before, sometimes the sales function, in order to meet their year-end goals, they may be going in for certain orders because they know their customers, their end customers really well actually. So there could be a loophole present in the function, in the purchasing function, that within 2 days or 3 days you can just get the amount, get the things, and then I mean within 20 days or 30 days you can return it back actually. So that loophole can also be misused actually. So that's also a kind of SOX lapse actually. So this again is a kind of double burden. So So double burden, as well as the money is also going out of the organization as sales incentives actually. So you should be really careful about all those SOX labs actually. And this SOX lapses will also are forming a part of the amount of transaction increase in your finance function actually. So you should be really careful and clear about what type of transactions are happening. And then so moving on. So I told you before why we are doing this pre-due diligence, all this, because we wanted to find out by understanding all these technology costs, SOX lapses, how much of activities are covered by the SSE, how much of claims, returns, and F&A related queries are there, types of queries handled by the customer service, and issues in procurement, ordering, and fulfillment. This will help you understand the time to serve, quality of serving, and cost to serve. And basis this, you will know exactly where to focus your efforts during consulting. I mean, when you really focus on improving your quality to serve and cost to serve and time to serve, then definitely the either the transactions, the number of transactions will come down, or also the time taken to work on a transaction will come down actually, right? So that's important. So I mean, the time to serve example could be like certain invoices may lack real details, so it goes to and fro sometimes with the vendor, and sometimes with the procurement function also it goes to and fro, or sometimes if it's a non-PO invoice, then it goes to and fro with the departmental head. So all these things goes into your time to serve actually. So understand all these things, so then you'll know exactly what is of paramount importance here, where to focus, whether do I need to focus on improving the cost to serve, or on improving the quality to serve or time to serve. But mostly the senior management of the organization which is engaging you, they might be looking at cost to serve only, but the cost to serve could be because of poor quality, as well as because of time to serve also, right? So both these factors contribute to a cost to serve, which may not be obvious in many times. So don't only focus on FTE reductions, also focus on transaction reductions, improving transactional quality, setting things right in the external areas, and that's going to reduce your cost to serve actually. That's important. And sometimes really, I mean, when we will go for a FTE reduction is realistically there'll be so many overheads sometimes available. Like in some places you may have a centralized shared service center, and in the regional finance there might be many people who will be just routing the invoices, who will be just validating the invoices, or who will be doing the same work what is being done by the shared service center. Identify what are those overlapping transactions happening actually. Like somebody has already quality checked the invoice in the regional level, but at a very high salary as compared to the shared service center. So find out how much of that is happening actually. So at that time we can go for an FTE reduction. But still, rather saying FTE reduction, is always important to say that we upskill and reskill the FTEs and redeploy them in other areas. That's my honest and humble opinion actually. So that's how things to be done. So the idea of consulting exercise is to sometimes it could be obvious, but that obvious will have certain non-obvious areas, and by answering those areas, you'll be able to addressing those areas, you'll be able to achieve what the customer wanted actually, right? So by doing the pre-due diligence, understand where to focus. And so usually, as I told you before, these are all the overall questions. At a strategic level you can ask these questions, right? But now I'm talking about something below. Not so strategic, but not so transactional also. Remember that. Uh, so here in accounts payable, what type of questions you can ask? Days payable outstanding. So identify the true DPO. So there is something as true DPO which gives you the days payable outstanding in number of days actually. So understand that. Compare that um, with your basically your inventory turnover ratio. So that's important. So when you compare that DPO with your inventory turnover ratio, you are actually doing a correlation study. By doing so, you will know exactly um, when the inventory turnover ratio is really high, what happens. That means the stock is getting, the raw materials are getting depleted much faster, or the stock is getting depleted much faster actually. When I compare that with your DPO, so that really shows that if I don't pay my vendors on time, that means at the rate of the depletion of the raw materials, then I'm in a mess, right? So think about a car manufacturing industry. There, the number of suppliers will be highly standardized. Suppliers know the company very well. 20 years, 30 years, 40 years of relationship will be there. But still, if I don't really pay my vendors on time, actually, that's going to have an impact on my stock, on the raw material stock, actually. And that could be one reason why I have urgent onboarding of vendors taking place on a month-on-month basis. So that urgent onboarding of new vendors could be a symptom of something not right with respect to, that means something not right, or the DPO and the inventory turnover ratio not matching with each other. That could be one reason. So please get into that and identify that. Find out how much of PO and non-PO invoices are there. So non-PO invoices, I told you before, it could be a reason for non-standardized procurement processes, or sometimes strong departmental heads bypassing the procurement function. So that could be one reason why we are having so much of non-POs being raised actually, which is not a good thing in fact, because they drain the company out of their cash, and and it really shows that leaders out of their own personal influence are going say one step or 4 step or 10 steps ahead to at the expense of the organization to purchase. So that purchase at that time may be needed, may not be needed, but it really happens actually. It shows up in oil and gas industry, where typically in oil and gas industry where suddenly certain equipments might be available in the market for at a very cheap rate, so people just go for that purchase actually, which by bypassing the procurement methods, so which might be good or bad. So in other organizations also it happens. So actually, so typically in semiconductor manufacturing companies also it happens like that. And what type of products are having blanket PO? That's important, because blanket PO makes people's life easier, but possible SOX lapses also happens here. Find out what type of products are having blanket PO. So whether it's a product that really is needed for providing the service, whether it's a kind of raw material, right, to do the service, or for manufacturing the product, or is it just a consumable for administrative purpose. So if it's a consumable for administrative purpose, definitely that's going to be a big SOX lapse. But definitely no one will go for a blanket PO for consumables, but as a kind of checks and balances, it's important during consulting exercises that you look into that aspect also. And what percentage of urgent payments are happening, and find out why. And out of that urgent payments, what percentage of that is not meeting the credit terms, like is paying much earlier to the customer actually, even before well before that. You don't get any incentives for that actually, right? Because certain vendors might pay certain incentives as form of early payment discounts, but but still, if it's very early, then it doesn't make sense. So right, so find out. So so that's also because that's also one of the reason why your organization might be suffering with the lack of cash flow or lack of cash, right? So because of these urgent payments. And as I have explained you, number of vendors onboarded month on month. Already I have explained you, so I need not speak much about why and what for that. And basically, how much of early payment discounts are availed? Please have a look into it. And duplicate payments and how the duplicate payments happens, in what form actually it happens. Whether it happens as a form of multiple POs coming in for the same product, it is quite possible. So that it's very difficult to look to understand that at the time to find out if it's going to be multiple POs for the same product actually. Possibly that can happen. So that means something really, some kind of SOX lapses are happening in the procurement function. Or is it the multiple invoices for the same PO it's happening? That's also, so that's very easy to identify. So find out how much of duplicate payments are possibly possible. And then taxation is also one aspect actually, because taxation is the place where we can come out with a lot of use cases. How taxation is carried out actually, and taxation is one area where you can bring in all your machine learning kind of classification techniques over there, because depending on the type of country and type of product, the taxes varies. So people usually spend a lot of time reading through the things, changes in the policies, or reading through the policies to bring about those changes or to apply those taxations. This is one good area where you can bring in machine learning classification techniques over here actually. And find out, so by understanding your business and by understanding your accounts payable function of the client organization, so you will get to understand how much of standardization can take place among the vendors, and how much of that how much of those invoices can be received in editable form, something like that, so that your indexing, if at all you want to automate something, your indexing, all those things is made easier actually. That's a way to avoid expensive use cases. So consultative engagement is not a place just to show your knowledge, is also a way to bring in the real profound improvements to the customer in a cost effective manner actually. So rather jumping every time into machine learning and all that, it's important that you understand how much can be standardized, what can be done, so that automation can be avoided. First try, I mean, always go for eliminating something before you actually go for automating something actually. So I would prefer elimination first over the automations, then I would prefer machine learning last to automations actually. That's very important. So nothing beats your process re-engineering, process improvements, followed by all these automations and machine learning actually. In fact, process re-engineering and process improvements, so you really know that they actually complement automations and machine learning classifications, all that. And what's the easiest way to classify? Do you really need a costly classification tool or machine learning tool, or for classifying the invoice types based on invoice type, or is something that can be achieved through your predefined email boxes that automatically hits a particular queue, and from that queue you are able to bring out the classify the right invoices actually. So all these things matters, followed by the accounts receivable. So in the accounts receivable, you can ask questions with respect to accounts receivable write-offs and defaults. How much is the backlogs we are having, and what is the aging of the backlogs, and in which region the backlogs typically happens, in what type of services and products the payment issues happens. I mean, the receipts of money from the customers happens typically. So all those things, and in which type of customer segment. So basically, it's a kind of a slice within a slice within a slice within a slice. You can start slicing your data and identify how things. I mean, how this uh, entire defaults and outstanding looks like, right? So that's where you can build your Power BI or Tableau kind of solutions over there. But just that is just a start point. That will only show you a view. By showing your Tableau and Power BI kind of analysis, things will not change overnight. Actually, the important the consultant, when they are providing the right solution, the solution for this aging and all that is not putting a Tableau in place. Actually, no. The idea is, by bringing in Tableau, what extra process diagnosis effort I need to do to reduce it, to reduce those symptoms. So that is where the real consultative solutioning lies. Actually, that's very important. I have seen many consulting assignments where people just say, I will go for a Tableau kind of. It's a kind of buzzword that you just bring in something. Okay, so but just by bringing in something, what happens actually? Or if I bring in a kind of machine learning thing to identify duplicate invoices, and I don't do anything about improving the processes to reduce the duplicate invoices, what is that? What is the value we are driving through the consultative exercise, right? So the end of the day, the idea of doing a consultative exercise is not to pinpoint where the problem is, but also to shed light on why the problem is happening actually, right? So it's very important. In some cases, pinpointing why, shedding light of why it is happening may not be needed. At that time, you can go for all these automations and everything. But in pretty much it is all these SOX lapses and all that. It's very important as a consultant, in order to have a good credibility. It's important that you shed light why it is happening actually. That's very important. And what can be done to reduce it, that is also important. These three things are needed, really very much needed. Where it is happening, why it is happening, and what can be done to reduce it or to eliminate it, right? Then talk about billing issues. What are the typical billing issues that happens, that incorrect billing is happening, why it is happening, over or under billing is happening, and billing errors and customer disputes, how much of them are there actually, and why it is happening, and customer queries. And coming back to treasury, how this flow of aspects, like all these transactions or all this information from accounts payable and accounts receivable are culminating into the treasury function. Understand that how the investment decisions are made actually, because sometimes we'll not call it as an investment decision in this case. Like in some places, the treasury might go for buying commercial papers, 10 days, 15 days commercial papers. But that might be one reason why the organization is facing some kind of cash constraint also, possibly. So have an understanding about that. Payment management, how the payment management is happening actually, how the auditing of the payments are happening, and how the cash position forecasting is done, and whether it is accurate or not, all that. And comes the general ledger activity allocation. So in activity allocation, what type of transaction it is, under which expense head the particular transaction has to be added, all that. So is it possible, can you bring in a kind of automation there? Because really 60-70% of your general ledger is all about activity allocation. They extensively work in ERP actually for this aspect. Even in treasury also extensively, this is a opening balance, this is a closing balance, these are the types of transactions. So when I match with that, whether I'm able to match the closing and opening balance by bringing in the transactions in, right? So can I bring in any automations there? Can I bring in any kind of machine learning kind of things there? Possibly. And so this serves the basis for reducing the amount of reconciliations that goes into the treasury and general ledger as a function actually. So in these two functions, humongous amount of reconciliations happens actually. So in some cases, just always do a kind of analysis, because usually the number of staff comparatively the treasury when compared to general ledger will be lower usually. Is there a possibility that I bring in one solution which can be used for both treasury as well as in general ledger? Find it out actually. And what are the typical book closure issues that we are facing? Whether the general ledger function is actually managing the issues, or is it just extending the issues, carrying over the issues from one period to another. Look into it and why it is happening, why those episodes are happening, and from which external source it is happening actually. That also you can identify. And what type of open app items are there actually? Is it how much of it is because of AP, how much of it is because of AR? So find it out actually, right? So based on all these things, you create a kind of logical thought process and then identify the value. Identify how you are going to attack it, how you are going to study the entire thing, right? Because all these questions that we have raised here are typically for where to focus, right? So do I need to focus starting from accounts payable to general ledger to treasury, or should I start focusing from accounts payable to accounts receivable to treasury? Possibly. Or do I need to start from procurement to accounts payable to general ledger? Sometimes you need to do those studies. So all this information that I have mentioned here will help you understand where to start your actual process due diligence, right? So that's the reason in the left hand side I have mentioned all the major pillars: vendor management, payment management, invoice management, procurement management, receivable management, customer management. And I have given the respective functions over there actually. So if you have so many non-PO invoices, please start from the procurement function, as well as start from the department, as well as include the department from where the whole lot of non-PO invoices are happening, why it is happening. Include that department also. It's very important. So that's what I'm talking about, external view. When you do an external interfacing, right? So you get to understand the system much better. You get to understand the problem much better. You get to come out with a better target operating model, a better solution, a better amount of use cases that are clearly having a huge impact on your deliverables. So my whole lot of request is to all these CFOs and all those leaders in process consulting to provide the opportunity to the consultants to focus on at a holistic level, at a systemic level, rather focusing on a shared service view level. Because when I get into the shared service level, I sometimes you get a kind of feeling that you are getting pushed. Okay, you show me the efficiency, show me the efficiencies. Definitely, we are going to show you the efficiencies, and that efficiencies can be shown only a methodical understanding of the business, methodical understanding of from where the transactions originate, Only by understanding that you will be able to show the best and best of efficiencies, right? That's important actually. Otherwise, it becomes a like kind of yearly exercise. I bring in consultants to my shared service center. I 10 use cases, go and automate, come back. 4 FT is saved. Next year, another problem you will have. Then additionally 10 FTEs will be there in the shared service center. And think about the amount of pain it causes to humans, right? All that. So it's important that we do things from a holistic perspective actually. So thanks so much for watching this video. I will meet you with further videos soon actually. Thanks.